What up, traders? What up, investors? Ken here from Dyslexic Investor, and we are looking at Uber Technologies again, ride-sharing company. Kind of had some very interesting option activity. We're looking at some really far out in year 2022. Someone's buying a very far out call option for around a little over nearly $700,000, betting for potentially for the price to continue going higher. We're seeing a lot of kind of kicking around here on the 200-day exponential moving average on the daily chart. So let's go ahead and kind of break this chart down, then we'll jump into the trade. With Uber Technologies, we've kind of a newer IPO, came out like late or early last summer, kind of just went high flyer and then kind of bounced around and then kind of came crashing down a little bit. Kind of had a nice little resurgence here, then kind of getting a little slapped in the face again to the overall pandemic and virus. Came back down all the way to $13.71. Kind of made a very strong recovery here, kind of petered around at 36, 35. Kind of came back down. Now it's hovering around the 200-day exponential moving averages, was around like $33 to $32 here. So we kind of been in a somewhat of a tight range here. We can highlight that here with this little box kind of here. If it clicks, kind of hitting the overall make-believe invisible wall here around 34 to 34.50 here. The overall trend is again a little choppy here. We did have a pretty kick down due to a lot of again the virus and things like that has not been the Uber's best friend, but a lot of the technology they're having, a lot of the things that they're innovating on could really propel it forward with Uber Eats, with the truck fleet stuff, and all that other jazz, and potentially hover cars. Yeah, I had a laugh on that one. With the 5 and 8 really kind of intertwined between the 21, which is the yellow line there, really kind of hugging it, kind of building a very tight squeeze, as we call it, with earnings on the horizon in the first week of August, so that's nearly almost 2 weeks away. Potentially could be just continue trading sideways, kind of holding around that $32 to $33 level if the overall market continues to be in its really tight trading path as well, kind of really on a slightly uptrend here. Again, looking for this really tight pattern to kind of continue, really looking at a potential low here at 31.64 on the short term. But again, we're talking that these options are extremely far out, so we kind of have to do some more work on the weekly side. So on the weekly side here, you can see here it has been again the high of 47, so we can do some very important Fibonacci work from the previous swing high to the swing low. You see here we're right at 33 is basically the 618 percentile move from the previous high to low, and that lines up with our little make-believe box, entailing that is a lot of overhead pressure. But once we're able to punch through that sucker, we can potentially go to higher prices. But this little make-believe line, this orange dotted line, is really keeping it down. It's like trying to keep a basketball underneath water. You just keeps on pushing it, but eventually, it should pop up and give it that strength to really break past that 34, 33 level. Again, with earnings on the horizon, anything can happen. Last earnings went fairly well, and it's kind of a hit and miss with a lot of the earnings, even go to the new global mischief stuff that we're dealing with here. This really could be, again, earnings is a complete coin flip. I don't have a crystal ball. I don't think anyone has a crystal ball, but a lot of people are saying that this is looking like it potentially go higher. It's kind of been really choppy. It's kind of been underperforming with a lot of the overall market. I think it needs its time to shine, so we potentially could see that break there. To the downside. So if you're going to be a bear on this case, you're going to be wanting it to fail on earnings most likely, and really break below that $30 level. That's significant because that will break the parabolic SAR trend here, and that usually when that happens, it's a pretty substantial further downside slide, and it can get kind of nasty because there's there could be a lot of short sellers on this. So we can kind of look up that number, and I can put it down below on the short sellers here. But anything can happen in the market. So let's go ahead and look at the trade. So the trade it happened around at almost 11 a.m. this morning. So 1,500 calls at the 45 strike price for the 21 January of the year 2022, again at $4.65. We put that confirm and send. So they paid basically $700,000. If we swing over Tastyworks here, that's what we use for trading options, you see that huge volume coming in today as well. Again, now trading a little bit higher at 4.7, so the trade's just up a little bit. So if you wanted to take the trade now, it would cost you $700,000 and a little bit more to kind of execute that trade. So again, this is extremely far out. We're talking well over 400. It's actually 449 days out, so that's pretty substantial in the future. So we're talking multiple earnings, multiple quarters that could unleash and continue to have this go higher. But we can see on, again, the chart, especially really tying it to all the weekly charts. So what we can do as well, we can really tie this to a monthly chart as well. There's not going to be too much on the monthly chart here as well because of the, again, newer IPO came out in this last summer and kind of just really came out strong and then really just kind of collapsed. Looking for a lot of upside to the $40 level. It has had, again, on the monthly chart, this looks kind of crazy, I know it does, but this is looking like it really needs to get above that $39 to $40 level to really break out. And again, they're trying to transition in this market and potentially acquiring some other companies and being able to go fully automated potentially, and all these other random stuff that they're talking about with the trucking in their hover cars. Who knows? I'm not going to tell them that they can't do it, but again, 2 years out, 549 days. That's a lot of things that could go wrong or right. But initially, in the short term, it really needs to break above that $34 level and then potentially start closing above that $35 level to really get this trend back in place. And again, it's going to take a number of quarters for this to happen. Like this chart doesn't even make it just. This is only showing to the end of 2021. We're looking for another 365 days beyond that. So again, substantially amount of time on this trade. Again, pretty large wager. We'll see how it plays out. Looking at, again, the 1,500 calls at the 45 strike price, 45 call strike price there. Pretty large move here. So we'll see on how that entails. Kind of compare it to another one in the zone is Lyft, which is kind of the complete competitor, but they're not in the same kind of markets like Uber. They're slightly underperforming than Uber is. Again, they are not really seeing near the 200-day exponential moving average on the daily chart. So if we kind of compare this back to Uber here, we kind of see we have broken above the 200 before and now kind of just trading around it. So going back to Lyft, you see that they've had multiple issues here around the 200-day trying to come out. So this kind of came around, I think it became public right around the same time frame as Uber. Really just kind of went batshit, crazy, then came falling down like Uber did, but it's been consistently underperforming on the weekly side. Has not really broken above that 21 in quite some time. We're seeing trying some positive movement here on a squeeze, potentially trying to break above that 21 here. So that's going to be, again, Lyft really needs to break above 34 as well, but they're currently trading at 30 compared to where Uber's at. So we can kind of do a little side by side here. We can go through, the flex here, and we can do Uber here on this side, and then we can do LYFT here. So you can kind of see here that you're just comparing apples to apples. You're not really comparing apples to apples. You're comparing oranges to dragon fruit here. This is clearly an orange here in the sense of really holding that 200-day here as well. This one is really not performing above the 200-day, looking a little bit more sloppy, looking more downtrendy. RSI is really flat here on Uber, and RSI is a little bit more negative here on Lyft. Same with, actually let me go to the squeezes, nothing really here. The momentum as well has been negative here, and momentum has slightly been positive here due to the Uber stuff here. Because again, I think Uber is the overall king, so everyone who thinks of ride sharing really thinks of Uber. Yes, Lyft is a competitor, but they're not as expansive as Uber around the world, and they're not expanding into many different categories as Uber with the hover cars. automation, and of course the overall trucking stuff. That being said, guys, hopefully this was enjoyable. I hope to see everyone tomorrow on our live stream. We're going to be having a Tesla earnings special. Please book your calendar for that, and we'll hopefully to see you there. I really great appreciate if you come out. Again, if you're interested in joining the Discord, completely free, check it down below. We have a lot of chats and investing ideas and trading ideas coming through there. And that's basically it. And guys, you guys stay safe, and I'll catch you guys on the flip side. Peace.